Welcome to White Hat Zone, the home of ethical, white-glove structured trading education and transparent insights into social trading. Today, we're talking about drawdowns, something every trader experiences and something beginners misunderstand. But by the end of this video, you'll understand them in a way even a 4-year-old could grasp. A drawdown is simply a temporary minus on your screen. Think of it like this. You're holding a trade, price moves the opposite way for a bit, and your account shows a floating negative. But nothing is lost unless you actually close the trade. So a drawdown is not a real loss. It's just an unrealized moment where your trade is temporarily underwater. Like holding your breath underwater. It's only a problem if you don't come back up. And even the best traders experience floating negatives. Markets move in waves, not straight lines, and strategies don't win every trade instantly, right? Sometimes they need time and movement before the setup completes. A drawdown doesn't mean the trader is wrong. It means the market is still in motion. Professionals understand this. Beginners panic. Professional traders handle drawdowns calmly because they use controlled risk and understand that floating negatives are part of the plan. They don't react emotionally. They follow data, structure, and years of proven behavior. And here's the key. Pros expect drawdowns. They accept them. They work within them, not against them. In social trading, when you follow a trader, you also experience their floating negatives because their trades mirror into your account. But here's the part that most beginners don't know. Some traders actually use rolling drawdown to their advantage. Like they don't close trades prematurely, allows breathing room, control room to move naturally back into profit. And this is why such traders' strategies are so consistent, because they understand the structure, the levels, the flow, and manages the risk so well that drawdowns become simply part of the path to profit, not a danger signal. And at White Hat Zone, we study traders with strong, disciplined drawdown behavior. The Golden Age, as an example, actually uses drawdown to his advantage to be able to read the market perfectly well, to actually close those trades out, and again, as opposed to closing them out in a drawdown, a loss, a realized loss. And Aurum handles gold's volatility with calm, methodical risk, and Convexus trades with a tighter but more riskier stop loss, but consistently recovers because of the exceptional risk to reward setups. These behaviors are educational examples only, and past performance is never a guarantee of future results, but understanding how these traders handle drawdowns is what separates informed followers from emotional ones. So if you want to truly understand drawdowns, trader behavior, and how consistency is built, not guessed, click the link below and access the White Hat Zone Learning Center for free. Trade smart, trade ethical, trade white hat.